Thank you very much, Scott. Hello, everybody. Welcome to the July 12th edition of Office Hours. I'll be your host, Jamie Hodge. And of course, as always, Steve Gomez is with me. What's up over
Yep.
there, Steve?
Beginning of a 5-day week after a few short weeks.
This is true.
Yeah.
This is true. Last Monday, market was closed. Hope everybody had a good 4th.
Monday
Welcome
before
back.
that, I was gone. Yeah.
Yeah, well, that's what summers are for, right? And you didn't really miss a whole lot
No.
regarding market activity.
Nope.
Yeah, it's kind of feeling like summer. The past couple of summers didn't really feel like summer trading, but boy, when you get days like today, it sure feels like a summer day. We'll get into that here in just a little bit. Before we get rolling here, take a minute for the disclaimer. Just want to make sure everyone in attendance is aware of the fact that all of the info that we present to you guys during these webinars, all webinars from Trade Ideas are for educational purposes only, simply meaning that we're not dispensing buy and sell information or investment advice. If you do need someone to dole that type of information out to you, please seek out someone like a registered Series 7 stockbroker or a registered investment advisor. But everything we share with you guys is just for educational purposes only. Moving right along, always like to take a little time at the top of the hour here, as Andy would say, to talk about our 5-star service and support and our educational assets that we have made available to you guys. I guess you could consider the trading room an educational asset as well. Over here in the upper left, well, let's see, my pen is not cooperating. Hold on one sec, ladies and gents. Okay, well,
I had
Steve,
a thought. I don't know. I had a thought that I was going to say as you scanned over our award-winning support. One of the reasons people don't realize our award-winning support is you're usually not just chatting with one person. If that person doesn't know the answer, we're like back channeling everybody else to get the crowdsourced answer and do it quickly. So that's one of the unique things I think we can brag about in our support. Now you've
this
lost
is
your pen. Is that what you're talking about over there?
Yeah, give me one second here. When I click on the pin and go to this monitor, it won't work for some reason. I've never seen that before. Let me just reboot it. Hopefully
Oh,
that
there it is.
fixes.
I think I see it.
Hopefully that fixes the issue. Can I
Should
mark?
do.
Oh,
Yay.
yay, we're back.
Yay.
I
Okay.
can color now. Okay. So as I was saying before,
More ink. Yes,
I
more
had
ink.
technical difficulties. The trading room, hosted by, of course, none other than the infamous Barry Anderson, um, opens the trading room 30 minutes before every open and does a fantastic job at showcasing his trading style and the way he uses the software. Of course, he likes to answer questions and help out the people in the room as well. So you got traders from every skill set in there, beginners, intermediate, and advanced. So it's a great resource. If you have not been taking advantage of it, please get in there and do so. Um, Barry's the best thing about the trading room, but the second best thing would be the price, which is free, which it's rare to find a trading room that is worth its salt for free, but that's part of the deal when you become part of the TI family. On the 5 p.m. Eastern webinars, Monday through Thursday, of course, you get myself and Steve for office hours. Steve's going to grab the steering wheel for the trade of the week on Tuesdays. Andy's going to ride shotgun with him. And of course, on Wednesdays, we like to change it up just a little bit. CEO and founder, Mr. Dan Merkin, along with Brad Williams. Always fun with those two. Then Andy's going to round out the 5 p.m. Eastern slots on Thursday with the trading studio, and I ride shotgun with him. And our daily support session every Monday through Friday, 12 p.m. to 1 p.m. Eastern, each and every weekday. Next slide will show you how to get there. So if you just use the URL in the bottom left-hand corner there, trade-ideas.com/live, that will get you there. That is a static address. So once you get there, just bookmark it for easy access moving forward. But this is the hour that we allocate for anything TI related. Typically, we have a different person on the mic Monday, Tuesday, Wednesday, Thursday, and Friday. Change it up a little bit. So it's a great place to get anything addressed in a live environment with a live trader/trainer personality. And of course, TI University, a great asset. Doesn't matter if you're just beginning or you're ready to get into the more advanced functionality of trade ideas. All starts with 101. and 201. I'd say if you're brand new, you can really expedite your learning curve with 101 and 201. Of course, intermediate and advanced are good as well, but dealing with the more advanced functionality of the software, backtesting, optimization, all that good stuff. So if you're brand new, you just signed up. The way you access these videos is just simply navigate over to YouTube, search for the Trade Ideas YouTube channel, search for TI University. They'll pop right up and you can watch them at your leisure. All righty, here we are at today's agenda. Some interesting things to talk about, of course, as I was kind of getting at earlier. Not the most volatile day out there. I mean, we just kind of grinded higher all day. But as we've talked about in the past, market going up, that high tide is not necessarily lifting all boats. Plenty of things out there that are not getting drug along with the uptrend here. So I guess, Steve, now's as good a time as any to kick it on over to you, and we'll talk about some of that overall market action.
Surely. All right, as you were talking there, I kind of grabbed another little thought that I'm going to expand on here. Okay. Yeah, starting with the SPYs, the S&P, the broader market. I mean, I don't know how to put it, but we're at the upper end of the channel that people often talk about. It looks like that channel is respecting the 50-day moving average here on many occasions. So there's a behavior that at some point in the future will be interesting to reference. And again, we're getting ahead of ourselves here. Another big bounce back very quickly on declining volume, but that doesn't matter, and the volume doesn't matter. But one thing I do want to point out was, I did a kind of a consultation with somebody today, and I do this with everybody that hasn't looked at the 15-minute candles, and I shared with him as a matter of fact, I'm going to offer to share with anybody that wants it here. So I can share the settings of my chart, and I'll drop that into the chat window right now. My 15-minute chart with 10 SMA and 130 SMA, and I'll explain. Paste the cloud and send. Okay, so that's in the chat window, not the questions window, but it'll be there. So I spoke to this person and I said, I don't know if you've seen this perspective, this time perspective before, but you can use it no matter what you are. If you're a day trader or a swing trader, I like to use it, especially when I'm exiting a profitable swing trade and trying to maximize profit, or just get a general feel for the jump rope of what the market is doing. And so I've zoomed out here on the chart, and as you can see, the only two indicators I use is this 10 SMA and this blue line. Well, this blue line is 130 candle average, which if you divide that up by 5 trading days, that's a perfect 5-day average as expressed through 15-minute candle perspective. And notice that day we had a big gap down last week, and the S&P fought its way through, but boy, did the sellers pretty much for the whole day defended that level. There's no one right way to use these, but when I see correlations like this, I like to share it and let people know that there are correlations out there and they can help you in your decision process. If you look at that and you think, well, that might be it for the day on the spiders. If these guys don't hold, if the sellers continue to hold that level, I found that interesting. And then we just shot through it. And for 2 solid days, this is why I call it my momentum indicator. The 10-period simple moving average just lets you know. I mean, if you had literally waited and said, and this is the rule that I use, all right, if you got your finger on the button and you're trying to take profits, I wait for a definitively a closing candle that is definitively closing below the rising 10 simple moving average. And if I stay in that trade until I get that candle, that doesn't count because it didn't close below. That doesn't count because it didn't close below. Same with that one. Once a 15-minute candle does decide to finally close below the rising 10 SMA, that short term, again, I'll emphasize that short term momentum is ready to die. And this is the candle that can save you so much time and effort and money by just waiting for this candle. Once it closes, you're going to look back in hindsight and go, yeah, that was the one that pretty much told me the momentum is going to die. So a little bit more in-depth intraday stuff that I normally do for this portion here of the market recap. But I found that just, again, a great example of why I only use 2 indicators. I'll use anchored VWAP occasionally on looking at certain things. That's exactly why I have this chart hiding back here, and this chart is hiding with no indicators, because occasionally I would want to come through and use an anchored VWAP and just kind of see what's going on with the anchored VWAP on a clean chart. But that's my backup. My primary is to use my 10, my 20, and my 50, and it just kind of lines everything up. So I found that interesting, so I thought I'd share that. And again, if you want that chart, it's in there in the chat window. But I feel like we're a little overbought here, and we can come back for a consolidation or pull back at any time. Look at the NASDAQ. There's been a lot of good movement in the NASDAQ, predictable movement. If you just look at that, there it is, the 10-period moving average on a daily chart does the exact same thing. It shows us that momentum is strong and momentum is intact. It also shows why I talk a lot about waiting for the closing candles before I decide if I want to get out of a trade. And those 2 days right there, if I adhere to my closing candle rule and not freak out in the middle of the day and look over and see it's trading below, but it's midday, wait for the candle to close and see if the trend, can resume. Another good example right there. So no bear case to be made whatsoever. It's just a matter of when does the market want to correct, who's going to take the baton next. There's a lot of rotation going on out there. There's always the possibility that if there's really something to be happened in terms of some charging alpha out there, it could be in the small caps. I don't know, but that's a pretty prolonged trading range we've been in. As the other markets have done better, but at any given point, these small caps could try and make a move. You never know. But other than that, there's really no bear case to be made, as I always say. And keep an eye on what sectors are rotating and looking interesting. The solar sector still looks pretty darn interesting to me. I like this look. If I just kind of draw the inverted head and shoulders there, and then a break above the moving averages, and then trying to just kind of dig in there and see what happens. That's all I've really got. Jamie?
Good stuff, Steve. I like the idea of the 130 average tacked onto that 10 period on the
Brian
50.
Shannon taught me that at Alpha Trends. It's a way to use your favorite 15-minute chart, which is mine, but still see that 5-day perspective. I could draw the 5-day on my daily, but I don't see the nuances that I would see intraday.
Right, not nice and simple, and that's always the best, I think.
Yep.
Very good stuff, Steve. Thank you for sharing that. Let
And
me
yes, Raj, we will have a recording of this probably on our YouTube channel later tonight or tomorrow, so you can rehash and go back on all this.
All right, so you should have eyes back on my screen. Yeah, Steve?
Yes.
Okay, thank you. All right, ladies and gents. Okay, so kind of a little heads up this morning when I glanced at my favorite compare count window after the first 15 minutes and saw what we see here. Almost 50-50, but not quite. A smidge of a downside bias, which basically means nothing. Close to 50-50, 51-49. What that always kind of tells me right off the bat is, you know what? There's going to be some stuff out there, but it might be slim pickings or just a slippery slope nonetheless. And that's kind of what we had today. If we just kind of push this to the side, get the SPY pulled back up here after that first 15-minute candle today. Well, not a bad indicator of the direction of the market. What we closed about 435 there and closed today right at the 437 level. So just from an overall market move, compare counts weren't very helpful. Not necessarily a downside move or an upside move being predicted here, but just kind of a non-event. The wind was kind of dead today. Lick your fingers, stick it up in the air, throw some grass up. If you're playing golf, just falls right back down. So no big surprise there. And of course, since there is no case for a bull market, path of least resistance was just that slow grind all day. If you're sitting out there holding a position or a blotter full of long positions, like we guys here in our little fund, you might notice, well, market's having a great time, but we're still slightly red on the longs that we have. So, the old saying, rising tide lifts all boats, we're in that mode where that's not necessarily true. It's still very much, as Steve was pointing out, well, not a stock pickers market, although that could fit the bill here, but more of a rotation and figuring out where the money is flowing out of and back into is the name of the game right now. So Holly, kind of reiterating what I just said there, not doing so well today. We'll take a look at the trades here in just a second, but we only had 8 signals generated. And if we kind of look over here at the channel bar, 4 from 1.0, 1 from 2.0, Neo kind of staying quiet today with only 3 trades. What that's telling us is the statistical data sets in the form of strategies that Holly's prepared for us, even though we did have quite a few. Yep, you can see them all right there. Even though we did have quite a few strategies show up today, about half or maybe slightly over did not produce any trades, as we can see from the 0 counts down here. All of the others, most active one, horseshoe up, pull back long, spitting out 2, underperforming today, spitting out 2 trades each and not hitting any of them. Whereas we're seeing, all of these other strategies only spitting out 1. So, keeping in mind that the AI strategies are a pretty good assortment of filters and alerts, and all these things have to line up. Those things, those traps just simply are not getting sprung, and when they do get sprung, they're not doing too well today. So if we sort, or they didn't do too well today. So if we sort the all trades blotter by moderate profit here, but before I go into the trades here, and there's really not a whole lot to talk about when we talk about conservative versus moderate spread here. If I just cycle through all of the risk modes here, aggressive, losing 179, conservative, 33.75, and moderate, 84.91. And these are all based around, I had taken risk a little bit lighter last week, bumped it back up to 50 bucks a trade today. So these are the numbers reflective of risking 50 bucks on a trade, okay? No point in risking a whole lot right now while we're in this choppy type of stuff, especially when we're doing automation in the AI. But as we can see here, no matter what mode we cycle through, you're taking a little hit today. Moderate versus conservative spread. Well, I can't say, and my blotter looks weird, so I just realized that I had it on historical functionality. There we go. I thought that looked a little strange, but even now that we're on the right day, notice the spread values here. What do we got? 12 bucks in the SGH trade. And by the way, we had a dual signal in SGH today, one coming from Holly Neo, the first signal, and one coming from 2.0. Both of these trades not doing too bad, but as you can see here, pretty much the only green on the blotter. Coming down here to the stop outs, if we notice aggressive right here, it's typically if we see an aggressive profit that gets back to flat or only down 10 bucks or so, or maybe even in the green, these would be good trade around candidates. But as we can see by the way that these finished, not a whole lot of trading around opportunity today. If we take a look at GBX, which got off to a good start briefly and quickly gave up the ghost, notice what the stock does around its stop area. Tried to get back above it a little bit, couldn't hold it, spent the rest of the day well below there. Now, when we're dealing with the AI, we do have the option to set a reentry. But for that reentry to occur, we have to get halfway back through the distance of the stop loss and the original signal. And we can see in GBX that never occurred. So pretty much the only one where it did occur today, I think, let me just look at my blotter real quick here, was the, on the tip of my tongue here, yeah, VRS. VRS did meet that criteria. Only problem is the reentry also didn't work. And when we look at VRS today, it was in a pretty tight range all day. Okay, well, come on, chart's a little laggy here. But here we are looking at the intraday on the first, on the 15-minute candles. We can see the first entry up here, and down here we got the stop out. Now keep in mind, 1882 all the way up to the top of the range today. We're only looking at less than a 50-cent range today, but it did meet the criteria. Come down here and tag the stop area right about here. Get halfway between the entry line and the stop area, and we got a re-entry. Only problem was, didn't work, got stopped out for a second time. So, it is what it is. it seems par for the course for the AI as of late. Uh, Last week, not so bad on a daily basis. Did really well Monday through Thursday. Friday had a losing day. The week before that, it was kind of got beat up. So right now, when the market's in this condition, it just seems like it's kind of hit and miss. Of course, we've still got 4 days left in the week, so it'll be interesting to see how the AI finishes for the rest of the week. I would think that we're going to see a couple of good days in here. Just don't know if it's going to be tomorrow, Wednesday, Thursday, or Friday. All right, let me check out the questions panel here. Can someone reach out to me? All right, looks like you're keeping them answered up there, Steve. And I will say this to Raj, also too, if you want a good demo or kind of a good walkthrough of the AI and the functionality, that live support session that I showed everybody how to get to at the beginning of the presentation, Trade Ideas /live or trade-ideas.com/live. You can always pop in there too to get any AI questions answered. All right, so just kind of an off day for the AI today. We will see what happens tomorrow. But before we quit talking about the AI in general, you know, not last Monday, but Monday before, we had talked about building a watch list of all AI prior stocks, okay? You can do it for however long you want to keep that history, prior 2 weeks, last week, or for example, wipe the slate clean today, start watching all the stocks that were for today and build that list so we don't get too big of a list, but we have something to keep our eyes on because you never know what's going to happen, okay? A good example of that would be this little guy from Friday. Let me just zoom this back in a little bit here. Okay, so SCOC from Friday, all right? Believe this was a little short sell here and a quick stop out. Now, notice what SGOC did after the AI took a stab at it short, okay? Created this beautiful little consolidation area right here. And when we see this type of activity, we never know which way it's going to go, but you can take a snap at it with a very low risk. AI was wrong. Maybe eventually it would have been a good trade around and it would have broken to the downside. But all we do is we wait for it to break in one way or the other, and then we take a position, okay? And if you would have done that on SGOC last Friday by watching that stop out and in essence, creating a trade around from that, well, that would have been triggered right around the $4 level. And look what SGOC did on Friday. It took a big O run, all right? Now, even if you didn't participate in this, which that was just beautiful because the risk is so low and the move was so huge, you never know how far these things are going to run. But even if you missed it on Friday and you're thinking to yourself, well, when stocks get in play like this, the thing in motion tends to stay in motion at least for a couple of days, and it stayed in motion even for today because even though it came a long way from $4 closed on Friday at 9.79, and then we opened at 17, which is the bottom of this candle today. So if you zoomed out a little bit or zoomed in, put it on 5-minute, whatever your favorite smaller time frame candles are. Matter of fact, let's just go ahead and take a peek at 5 minutes here. This would have been on your radar. And whether you took a stab at it in the first 5 minutes and said, you know what, I'll give it down to the opening low, would have kept you in the trade, or whether you said, you know what, I'm going to see how it shakes out, had plenty of time for a pullback opportunity down here. But in any case, what a handsome range or potential this thing had in it, from 17 and change all the way up to almost the $30 level today. I think we topped out right at, yep, high of that candle right there was 29. Okay, so I just want to show you guys a simple example of keeping tabs, whether on the Holly priors, whether it's prior day, prior 5 days, prior 10 days. Everybody's going to be a little bit different as far as how many symbols they want to carry forward. But I think I'm going to start fresh this week, and it's real easy to do that because today's Monday. All right, want to watch all the fresh ones that have just come through today. So just as a little refresher course here, it's real easy. Just come over here to tools, set up a symbol list, create a new list here. I'm just going to call it, since this is the week of the 12th, I'll just call it 12th Holly Plays. And then once we create that new list, we're just gonna populate it. But before that, we just gotta grab the symbols here. It's real easy. Don't have to worry about copying SGH twice because it will get rid of duplicates for you. Hit the old Control C button, edit the list, Control V them in there, and you'll notice when we go back and hit edit, SGH is only in there once, so it gets rid of all the duplicates. Now I've got 1, 2, 3, 4, 5, 6, 7 to attach to my favorite top list. Watch what those guys do tomorrow. What I'll focus on is, hey, is there any volume in them? If the volume is in them, I'll keep tabs on them after the first 15, 20 minutes. If I haven't already taken a position in one, I'll set my entry points if the pattern is conducive on the intraday and the risk is acceptable. So just think about this, starting off with 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 7 symbols. But how many might be produced tomorrow and how many might we have by the end of the week moving into the next week? So how many you want to keep tabs on is up to you. I'm starting fresh from today and we'll see how that methodology plays out. Okay. Now, set up a little top list, whatever you feel is necessary, your favorite metrics, relative volume, how much is it up, whatever your favorite columns might be. Now, one of the good things about a slower market is my high volume, high and low tickers. Well, there's not as many symbols coming through, so it makes it a lot easier to sort. Of course, trading is never easy per se. You still have to sit there and wait and wait and wait. If you've been watching South Park from the very beginning, kind of reminds me of the chef song, you wait and you wait and you wait and you wait. That's what trading is a lot of the times, because I know that all of the symbols coming out of here are going to meet the volume requirements that I want, but we have to wait for the timing to be there and for the pattern to be there. And the more pristine the pattern, the better our odds of success could be. So out of all the symbols that have come through here lately, today, I should say, as I scroll through here, you can see a lot of repeats, okay? So it was just the same stocks over and over again as they hit highs. And over here, the same stocks over and over again as they hit lows. But out of all the symbols that I saw today, only one from the long side and one from the short side stood out as far as pattern quality goes. So sometimes that's all it takes though. So I tell you what, the first one we're going to take a look at here, and these windows are what I watch for those opening range breaks, otherwise referred to as orbs, ORBs. The first one on the downside was just beautiful. Now here we have CLDX. Here's where we got the break to new lows. So I see CLDX coming through here. I see it has quite a bit of potential. We look over here at the daily, nice juicy gap up. Of course, I think every new trader at some point tries to play the gap up, gap down retracement game. What you quickly find out is, well, it looks good in retrospect, but trying to nail these gaps, whether they're going to continue or close the gap, is a whole other matter in and of itself. So just waiting for the break to occur, if we get a nice setup on the intraday, is a good way to do this and be able to maintain, somewhat of acceptable risk. The smaller the range, the less the risk. So we can see right here, we're looking at 5 minutes. Whether I go to 15 minutes, we're going to see more of the same here. Okay, just a few less bars to deal with. But even on the 15-minute, this is just beautiful. Okay, I don't know, my line got a little squished down there. But as we see CLDX breaking this low here, would have been a beautiful short. This level right here, 40.92, and we did cruise all the way down to 38.67. So some nice alpha potential in there from the entry point that we see here. Now, always talking about risk, what was my risk? Well, not including the entry candle, which is right here where the blue arrow is, the high of the prior 15-minute candle, which would be this guy. All right. So decent risk, decent reward. You know, in today's market, getting a little bit over 1R isn't necessarily a bad thing. When we're in a more active market, a lot of the times we can get 2R, 3R. But for a very clean setup today, probably 1.5R is what we got in that one right there. So just a nice, well-behaved trade. Looked like it might set up once again, but the buyers came back in, got that close above the 15 period, or excuse me, the 10 period there, as Steve was pointing out on the SPY earlier. But just the exact opposite when we get a short, we get that close above the 10 period. Typically, that's when the momentum is going to die. So a real clean entry, nice little trade over 1R on CLDX for opening range break trade today. And then we had one that was pretty active on the upside today. Come on, pointer. There we go. And this one came in the form of Tuffin. Okay. Once again, looking at 15-minute candles. Buyer clearly in control here. All right. Where'd that candle open? We had an opening price of a 947. So, I mean, we opened slightly below these candles from the prior day. Gap didn't take all the steam out of this one, but buyer clearly in control here, takes a little break. Buyers and sellers become equal, and lo and behold, 1, 2, 3, 4, 5, almost a full hour and a half of nice, tight sideways consolidation here. Get the alert as that little Tuffin was busting through 1076 here. And hey, as far as a trade, this behaved exactly like all traders would like it to behave. Immediate gratification from the 1070 level, capitulating up here on the high of that candle of 1350. Okay, of course, are you going to get out the top? Most of the time you're not, but a nice big juicy reward area. And let's talk about the risk here. So this being the entry candle here, the prior 15-minute candle, we would use slightly outside of the low, which would be right here. So a nice clean entry on this long play. Very small risk, never even gave us a wiggle down to the stop area or even halfway to it, and just a nice clean trade. Where you got out is another matter. So as far as risk to reward on this one, very small risk area, very large reward area. Not sure how many times we could have fit that in there, but it's quite a few. All right. Yeah, I'm not, of course, we're focusing on this level right here, Dave. Unless my chart is wrong, showing an open of 947 right here. And Gaj, I see your question there. Where I look for these high volume plays, that's what these alert windows here are doing. If we just take a quick peek at the configuration, what you're going to see here is it's a very simple new high ticker, but the spice comes because we're mandating 3 times relative volume. Stocks had to have traded at least 100,000 to try to avoid the more thinly traded ones and the big spreads. So it's a real simple configuration, and the exact same is true for the short side. It's just that when we're looking for the opening range breaks to the downside, we have to have the new low in place, but the filter set is exactly the same. I've already got these windows and the cloud links queued up along with another window that I'm about to show you guys. So I will drop all of those links into the chat area before we're done, so you can add these windows to your desktop if that's what you'd like to do. All right, just let me wet my whistle here, and then we will proceed here. Okay, market's a little tough right now. Always trying to find new things, okay? And there's a lot of people out there that might have a pattern day trading account or a non-pattern day trading account with an excess of 25K in there, and they can make as many trades as they'd like. But then again, there's a lot of people that do not. So I've been trying to put together an idea, and Michael Noss and I have talked about this ad nauseum. Never really came up with the killer strategy to do this, because developing something for this idea is, well, we're just going to say it's not easy. So I just tried to take it from a very simple approach. And the idea is for swing trading, I mean, hey, what is the minimum swing trade? One overnight session, okay? So the idea is to find things to enter in the last hour of the market and to exit those positions at the next open. Okay, therefore, hopefully making some money along the way, but then not being subject to the pattern day trading rule. So what I did here is I started off looking at the last hour. So let me just drag this window over here. Okay. And swing for the close is what we're calling this one. And once again, it's a very simple configuration, but using the back tester to find, okay, if the idea is, let's try to find things in the last hour and see what might happen. But as I got in there and kind of poked around a little bit, I figured out it wasn't the last hour, but it was the second 30-minute period. But I'm getting ahead of myself here. Let me do this real quick. So this is what I ended up with. Of course, a stock that's strong, hitting new highs in the last hour, last 30 minutes is a sign of strength. And when we're talking about filters, what I wanted to do right off the bat is avoid all the thin stuff, okay, or the low cap stocks. So to start off this little experiment, what I did is I just started with market cap has to be 4 billion or higher. And this is really all I started with. I added the 15-minute RSI as a enhancement. So what I'm going to do here, just kind of walk you guys through the process, is we're going to strip this one back down. We're going to remove the RSI settings. We're going to remove the time of day that I have here, which is a 1-minute period to take these trades. You're like, wow, how did you arrive at that? Well, I'll walk you through the process here. All right, so I initially started doing a back test starting in the last hour, 2 p.m. my time, going until 3. Timed exit at the market open tomorrow. Risk management, not really that important because, you know, hopefully you're not going to get stopped out in that period that we make the entry until the close. Obviously, this is something that you want to be there doing, not automated. Advanced, we're just going to back test 40 days, and this was the first back test that I did. Steve, this is where you cue up the elevator music. Girl from Ipanema, maybe. Yeah, the backtester heard me talking about it, gave us a little pause there, but looks like it's going to power through pretty good. Okay, what do we got here? Okay, so right off the bat here, we got a ton of trades coming through this guy. If we look at the daily, we can see, hey, not too bad up top here. Of course, we got some nasty days to deal with here, but a lot of trades. First thing I do is go to optimization. I'm more interested with the time of day to start the party here. So just cruise on over to time of day. Here we are looking at 5-minute intervals, right? And I can see, well, things kind of turn sour once we get past the 229 mark. So why even deal with all of these guys here? Why not just stop it at 229? We're going to go back there. And so I did that first. First, I shrunk the time to which we take trades by that factor right there. Okay, well, want to get rid of all these guys, so let's do that, and let's just go ahead and crunch the numbers again. And I could have had these scans already run, but I know that everybody likes to sit here and watch the numbers spin. Where's the fun in pre-run scans? Okay, so it still looks like we have a pretty gargantuan amount of trades here, but let's go see what we did as far as time of day goes. Okay, now we're not looking too bad. Okay, we got a lot of green here, taking trades, not in the last 30 minutes, but between 2 and 2:29 my time. So we'd be done entering trades 30 minutes before the close. But what I'm noticing is it looks like, look at all the money, all the trades and a big portion of the cash are up here. So maybe we need to go a little bit deeper here, okay? Since we only have roughly a 30-minute period to look at, well, we could chop it into even smaller time increments. And then what I would do is I would look and I would go, well, it still seems like most of the trades and a large portion of the cash are being generated between these two times right here, okay? So to save everybody from watching the odds maker again, the times that I ended up to back test that looked the best, or to make the entries, I should say, after going through that about 4 or 5 times, I came to the decision, you know what? This 1 minute period here should provide me with plenty of signals and give me something to go on, okay? So after I found that time period, I went to my favorite optimization and looked at the 15-minute RSI and plugged these two values from the optimization or the optimizer. So all I did is optimize by time of day, and then I added the 15-minute RSI with the values that you see here, which these aren't hugely off the hook here, but they're significant nonetheless, giving the stock that extra little pop. So, the logic is if it's hitting highs and it's got volume and those RSI settings are at those levels, well, then it might have continued momentum into the next open. So once we put those things in place and give it one more turn here, this is what I ended up with, okay? 387 trades, only taking trades in a 1 minute period, which I derived to be the most fruitful by optimizing by time of day. Obviously, there are a lot of stocks doing this, but the ones at that time period in that specific 1 minute period, along with the RSI settings, yields this. Looks pretty similar again, but keep in mind, check out my settings here. In this scenario, we're only allocating $1,000 to each trade, so we're not swinging for the fences, right? I could adjust my buying power here. Let's see, 16, we'll go 17,000. And we're still looking at a projected decent annual and monthly return here. Now you might be saying to yourself, well, I can see that there's more winning days here, but I'm concerned about these two big red dots here, okay? Well, they look big, but keep in mind, allocating $1,000 to each symbol here, look at our worst day, 142 bucks, okay? Kind of makes you feel better about these. Biggest winning day, 189 bucks, okay? Um, in addition to that, if we go back and look at these days here, and we pull up the correlating SPY candles as well, well, what you're going to find out is we're just at the mercy of the market here. So on this day, 617, let's see, that would have been right here, okay? So this is the exit time. So what I do here is if I go over to the calendar, we go to 617, here's that big losing day. And we can see, okay, the 17th is the exit date, okay? Trades were initiated on the 16th here, and we got the little gap down here. So we're at the mercy of the markets. But even though these red days look kind of scary, they're not really that bad. And looking at the loss amount, so 517 also got to spin back a little bit here. Right. So 517, we got the gap action too. So even with that, you would expect a strategy like this to not make money, right? But all of the other days look pretty decent, okay? Take the outliers out, which really weren't that bad. We see a lot more, we see more green large bars than we do, and we got our little assortment of small losing days as well. But keeping in mind that these are all companies with market caps above 4 billion, you know what? I'm probably going to run this on one share the rest of the week just to see how it plays out in an automated format, because it doesn't look, people get it in their heads, oh, I've got to develop these strategies that produce, 70% winners, 80% winners, and have these gargantuan spreads. But think about it from this perspective. This looks more realistic, pretty much, especially on a short term, about the shortest term swing trade that you can hope for, getting in the last 30 minutes and holding and getting out at the next close, okay? Now, I will take it one step further. When we go to our timed exit, we can only say, get me out the open or get me out the close. What we can't fold in here is, you know what? Get me out at the next open plus 30 minutes, plus 60 minutes, okay? Because let's just go back to the last day, all right? Which the trades that were closed out on the 9th, let's take a peek. Okay, OTLY, and we're just gonna look at the dailies on this. Not a bad entry, and then if you got out at the next open, you made a nice juicy profit there. Now keep in mind, these values here are only allocating $1,000 per trade. So that one worked perfectly, and it did. I tell you what, let's go to 30-minute candles here, and we can see it here too. All right, entry, we hold overnight. The next day, the stock opened at 23.58. We were long down here. Not a bad little overnight hold, getting out at the open. But what you're going to see in these next three trades is completely different action, okay? CPT, here's our entry corresponding with the blue line. We had options here, okay? So keep in mind what I was getting at earlier. We can't tell the back tester to go, you know what if I held, or what if I wanted to get out at the open plus 30 minutes, plus 60 minutes, okay? That's what we can't do, but we can size it up in real time. Here's our entry signal coming around 138.60, 138.73 to be exact, as we can see here. A little bit of risk management going, well, I got the gap up. Maybe I'll take half off here, set a break even stop back to flat. Never would have stopped you out. Nothing to really take you out of this trade as it hugs that 10 period, even on the 30-minute candles as well. So there could be more left on that trade based on what you see on the next open. You're going to see the same exact thing here with WPC. Entry coming right here at the 76.70 level. Yeah, you could have got out whole position or half position here, kept a break-even stop, or it's always better to go a few pennies below, and enjoyed a nice 2-day run in WPC as well. And we're going to see pretty much the same type of action with INVH here. Only problem is, yeah, we did squeeze out a little bit, but if we tried to get crafty with this one, more than likely, if we were using our original entry signal, we would have gotten stopped out. So just want to point out some things that you can't necessarily generate from a back test. We know that going into the trade, we've got decent odds on our side. If we get out, boom, right at the next open. But just by using a little bit of, and it doesn't take a whole lot of forethought to go, well, I'm just going to set a break even stop or 5 cents below my entry. Maybe this thing has additional juice left in it. So there are options, right? You can turn this into a multiple day swing hold if the chart is telling us that it might be conducive to do so, okay? So look at this as a starting point. Obviously if you get a real big gap up, sure, there's never anything wrong with selling that gap. But if there's a little bit of, if you're clearly above the entry level and you got a little bit of room in that trade, only take half off. See if you can get more on the second lot. Bottom line is, if we're already in the money, set that break even stop or just shortly a few cents below the stop, and we can leverage that trade. So I'm going to drop this guy in there too, and I encourage you guys, once you get this window, probably not a bad idea, those of you who are premium subscribers, go in there and pull those RSI settings out, see if you can find something different, okay? See if maybe another alert might be conducive, like running up or maybe even running down. I just picked new high because that's a good sign of momentum. All right, so let me drop all these windows into the chat panel here. All right, they should come all at once here. Okay, there they are. New T high, new T low, and swing for the close. All right, ladies and gents, looks like we're butting up against the top of the hour here. So as always, I want to thank everybody for popping in. We know you're busy and we really appreciate you taking the time to come and hear what we have to say. Thank you, Steve, for your commentary earlier. So Scott, if you're ready to walk us on out, let everybody know how they might be able to save a little money on a new subscription or an upgrade, we're ready for you.
Yeah, a couple items. Everyone should make sure they've got the Favorite Strategy Indicators ebook written by, are you on the right slide there? There you go. Written by Dave Mabe, our Director of Software Development. It's got some great info there for you, teach you how he uses trade ideas, and it's got some links in there that you can add to your layout. So trade-ideas.com/strategy, go ahead and grab that free ebook. As a podcast, we did some great interviews earlier this year. Should have some new ones up soon. Search for Trade Ideas Podcast wherever you listen to your pods. Add us as a subscription. You'll be ready to pick up the next one, and do check out the archives. Sunshine is a code that will save you 15% off your first month or year of Trade Ideas. So use that to upgrade from standard to premium or to start a new subscription. Save a little cash there. You can find Jamie on Twitter at QuantBot. Also look for @TradeIdeas and @TISteveG. That's Steve. Trade Ideas Pro is the Facebook handle, and any questions, shoot them to info@trade-ideas.com. That goes to our help desk software, so it doesn't get lost. It goes to the right place, gets you the answers that you need. The recording will be up later on tonight or tomorrow, so stay tuned for that. And we'll shoot you a link tomorrow from GoToWebinar with instructions on how to find it. So thanks, everyone. Thank you, Jamie and Steve. Good one.
Thanks, everybody. We'll see you guys tomorrow.
See you later.